Hello and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, Tuesday morning and looks like a good Tuesday morning given the fact that global cues are fairly strong. We ourselves have clocked in a six straight session of gains yesterday. In fact, we did, go past that 23,700 mark on an intraday basis. Now, the key question is, are we looking at, zooming past that 23,800 mark on the upside as well? Because that has been the recent swing high that we would like to, in fact, cross for the rally to extend to somewhere around 24,000 or thereabouts. So, yes, is this uptrend here to stay, or are we going to see April 2nd as a big risk going forward? We'll try and get our experts to answer that question for us. But today, as I mentioned, a strong start expected, a 7th straight day of gains expected. Also good news, when it comes to fund flows, because foreign investors were net buyers in yesterday's session as well. Lots to digest, lots of stocks in focus, and of course all your stock related queries will also be in focus. Keep them coming in on a live feed. We'll try and get them addressed. But before we move any further, quickly take a look at the top headlines at this hour. Wall Street rallies on hopes of a softer stance on reciprocal tariffs. The Dow surges 600 points, while the Nasdaq jumps over 2%. The 10-year Treasury yield surges to 1-month high. Asian markets also trade higher, mirroring Wall Street moves. The GIFT Nifty is indicating a positive start for the Indian market. Even in the pre-open, we can see a good 80 point uptick on the index. Well, oil prices, surge after US President Donald Trump said he would impose a 25% tariff on countries that buy oil and gas from Venezuela. Gold prices ease on dollar strengthening. SEBI eases disclosure rules for foreign portfolio investors after Tuhin Kanta Pandey chairs his first board meeting. He also forms a high-level panel to review conflict of interest rules for its own board members after the controversy surrounding the former chairperson, Madhavi Puri Butch. The Indian government proposes to end the 6% equalization levy on online advertising in the finance bill. The move will benefit global tech giants like Google and Meta. The 6% levy has been in place since 2016. Well, let's quickly take a look at the cues for trade then before we get in our technical expert, to point out what kind of levels to watch out for in today's session. We did clock in a 6th straight day of gains yesterday. This 6-day winning streak, we've seen that for the first time since September 2024. In fact, markets are at a 2-month high, after this 6-day gaining streak. In fact, the Nifty had turned positive for 2025. The Sensex had also crossed that 78,000 mark on an intraday basis. The biggest contributors to yesterday's gains were the likes of financials, even realty for that matter did well, and IT, that has been an underperformer, also participated in yesterday's up move. BSE listed companies, mind you, have gained market cap of over 35 lakh crore rupees in the month of March itself. Rupee, that deserves mention because it has been outperforming its Asian peers. In fact, it is set for the biggest monthly gain in 6 months. Aside of, other sectors, even gas stocks were doing well yesterday. Some regulatory boost expected with PNGRB, of course, looking at tariff reforms. So if that happens, of course, it will be a leg up for gas stocks. But yesterday we saw a very strong up move coming in on the likes of GSPL, GAIL, even IGL, MGL for that matter. In terms of put call ratio, it rose to 1.22 vis-a-vis 1.15 in the previous session. And, looking at the stocks in FNO ban, no new additions, but there are a few stocks that continue to be in FNO ban. Those are the likes of IndusInd Bank. In fact, that is the only stock in FNO ban for today. Some of the stocks that were removed from the FNO ban are the likes of Hindustan Copper as well as Polycab India. As I was mentioning at the start of the show, FIIs remained net buyers yesterday. They bought stocks worth 3,055 crore rupees in the cash market. Even DIIs were net buyers to the tune of 98 crore rupees or thereabouts. So yes, both FIIs and DIIs were buyers in yesterday's session. But let's quickly bring on board our technical expert for today. Joining me is Ajit Mishra, Senior VP Technical Research at Religare Broking. Ajit, lovely to have you on the show. If you look at the pre-open, it's hinting at another 100-point bump up on the Nifty. But would you be working with 23,800 as the next level to watch out for on the index, at least for today?
Yeah, good morning, Nandita. So, yes, a much needed respite for the market in continuation to what we observed last week, 4% kind of a gains, strong start. The good part is, Nandita, that we have reclaimed the major averages, long-term averages for both the key indices, Nifty and the banking index. In the last trading session, 23,400 was the area which we were eyeing. Nifty decisively opened above the same and maintained that positive tone throughout the session. So 23,800, 24,000, 24,100. These are the areas basically where we are eyeing next. So obviously 23,800 being the previous swing high holds importance, but considering that we are seeing an uptick in the GIFT Nifty and banking is showing no sign of slowdown as of now. Plus the other sectors, they are also witnessing noticeable buying on a rotational basis. So all this indicates that probably 24,000 is something that Nifty is likely to test in the near future.
Okay, those are the levels. Then on the Nifty Bank, of course, you mentioned, there is a fair bit of strength on the charts of Nifty Bank as well, right? We are at somewhere around 51,700, 750 thereabouts, just about 5% away from 52-week highs. How would you be playing this rally on the Nifty Bank Index? On one hand, you have a stock like IndusInd that has corrected quite a bit. In fact, most of the experts also pointed out that it is in oversold region as well. But then on the other hand, you have stocks like Kotak Bank from the private banking lot that did extremely well yesterday. You also have SBI that is firing up. How do you really play this up move in the Nifty Bank Index?
So yes, so banking financials, basically they are the one which are leading from the front, and the way we have seen the recovery in the banking index specifically, I won't be surprised that gradually we are inching towards the record high and in fact surpass the level as well. Why I'm saying this? Because the private banking majors, like you rightly mentioned, ICICI at the record high, SDFC is catching up, Kotak phenomenal move in the last 1 week. And now we are seeing that the PSU pack, they are also gradually inching higher and catching up with the move. So overall, the stage is set. But yes, for fresh buying, one needs to be slightly cautious because after this surge, there could be some consolidation. So if you are okay with that, means 4-5% kind of a stop losses, then you can go ahead and buy the momentum. Otherwise, you can wait for some consolidation or look for the PSU's name rather, and some of the financials name like Bajaj Finserv, where we are seeing fresh traction.
Okay, that's the view. That's how one should really play the Nifty Bank Index and the banking stocks. But one stock that's in focus aside of banks is IRIDA. The stock has had a phenomenal 20% move in the last 5 sessions, and yesterday we had the RBI releasing revised priority sector lending guidelines. Eligible loan limit has been increased and will now be in the range of 35 to 50 lakh rupees. Renewable energy loan classification has really been broadened. IRIDA, do you think it is entering overbought zone right now after the 20% move, or do you think there's more upside and one should really look at riding the momentum?
So Nandita, we were at 310 in the month of July 2024. So more than 50% kind of a cut is something that the stock observed. We made a low around 135. So I don't think that we are in the overbought territory yet. Gradually, we can inch toward the long-term averages zone, which is close to around 185, 190. That could be the area where one should be slightly cautious of. So as of now, one can continue with the long trades. 160 should now be your stop loss, with 190 as a positional targets.
Okay, not in the overbought zone yet, and of course there is more upside because it has of course halved from its 52-week high of 310 or thereabouts. But there are a flurry of QIPs that are open. Central Bank, you have Punjab and Sind Bank, and you also have restaurants brand Asia. Any of these stocks are catching your attention and worth a play over the next couple of sessions?
So PSUs like what we have observed, especially in the banking space, we are seeing traction, but I would rather stick with the top names. So stock like SBI, Bank of Baroda, Canara Bank, PNB. These are the stocks that one should be focusing on from the PSU basket. RBA, the trend is still down. There is no sign of recovery yet. It's still struggling below its short-term averages. So one should refrain from stocks which are quoting at the 52-week low or struggling to witness any meaningful recovery despite market witnessing strong traction. So stick with the performers and wherein we are seeing in sync move with the benchmark.
Okay, stick with the performers. That's the view. But since we are talking about banks and PSU banks, so I'll just quickly take up a few queries as well since they are trickling in as we speak. GC Prakash wants to know your thoughts on Bank of Baroda. He wants to know the short to medium term level on the stock. He's holding 230 shares at the rate of 206 rupees per share. Wants to know what he should do going forward. Your thoughts?
So certainly he should hold because we are seeing decent recovery in Bank of Baroda as well. Means from 190 to 224, and still the 230 is the area basically where we have the long-term averages placed. Around that area, we may see some consolidation again. So partially around that area, he can book profits because he bought at lower levels and trail his stop loss to 225 for the remaining positions. So once we break this zone 230, 35. Then probably we are set for the next leg of the up move toward 250 levels also.
Okay, that's the view then. I hope that answers your query, but let's move on and talk about some oil and gas counters. Energy Pack has been fairly active. Yesterday, of course, the gas sector was in focus. We saw good rally coming in on the likes of GSPL, even IGL, MGL for that matter. OMCs have been in focus. Crude had been cooling off, but again, we've seen a resurgence in crude prices as well. But the latest development is that US will be imposing 25% tariffs, or planning to impose actually 25% tariff on countries that buy oil from Venezuela, and this could happen from the 2nd of April itself. Now, ONGC Videsh, ONGC will be one stock in focus, and even OMCs for that matter. ONGC Videsh was planning to recover $500 million from Venezuela by getting more crude, and ONGC Videsh was also looking to increase production at its two projects in Venezuela. I think India, China, US and Spain, these are some of the top, importers from Venezuela. Given the fact that we've seen a fair bit of run up in the entire energy pack, is there a case to ride the up move, or do you think this comes as a bit of a dampener and one should really stay on the sidelines right now?
So in fact, I would recommend to at least book some partial profit in some of these names. So OMC still, I feel that we have more legs to the up move, but the other names from the refinery side or gas distribution name, likely a possibility of further consolidation after this recent recovery. Is something that is more visible on charts. And if you see the Nifty energy index also, we are closer to the strong resistance zone, which is close to around 34,000, 34,300 levels. So in both terms of benchmark and the stocks, possibly we could see some consolidation now before any meaningful up move. So book at least partial profit and maintain a trailing stop loss in most of these names.
Okay, that's the view. You can book partial profits there, but with that we have the market opening, the first ticks coming in really, and it is looking a fairly good start for the market because we are around that 23,750 mark as we speak. We have crossed yesterday's swing high of 23,700 or thereabouts. So yes, inching closer to that crucial level of 23,800 on the upside. Sensex, a good 360 point up move coming in, a 0.5% up move when it comes to both the benchmarks. The Nifty, of course, almost a 100 point up move. The mid cap index as well moving in tandem. In fact, a 0.5% gain coming in on the mid cap index as well. The Bank Nifty, only strengthening because 51,900 is where it's at, another 200 point or a 0.5% up move there. Let's see 52,000 whether we can clock that level today or not. Early days to comment on the advanced decline ratio, but still right now it's looking very positive. The advanced decline ratio, the breadth of the market has been improving. Even yesterday it was 2:1 on the NSE, and today as of now it's almost 6:1. 1,700 stocks advancing to 290 stocks declining. So yes, the picture is looking pretty perfect for now, but let's see if this momentum continues. But let's take a look at some of the other sectors then. Yesterday we had participation from all the sectors, even IT that has been an underperformer in recent times participated in yesterday's up move. A 1.5% gain we saw yesterday. Today as well, it's a good 1% uptick on the Nifty IT index. So yes, after the underperformance, some bit of buying coming in at lower levels. Aside of that, look at the auto pack, 0.5% gains there. Metals, however, are trading in the red. Even oil and gas, after the solid move, we are seeing some bit of a weakness when it comes to the oil and gas pack. Of course, crude has inched above that $73 per barrel mark. So perhaps OMCs will be feeling the heat of that, but we'll just take a look at OMCs and how they are doing. But right now, let's take a look at what are the top gainers on the index. Ultratech Cement, of course, UBS has upgraded some of the cement counters, Ultratech being one of them, and I can see that it's the top Nifty gainer. 3.5% gains on the shares of Ultratech. Even HCL Tech, yesterday CLSA had upgraded the counter. HCL Tech, TCS, Infosys, all these three counters are gaining in trade today. L&T, some big order wins over the last few days, and of course continues to be among the gainers on the index. Grasim, Maruti, and even private banking names like Axis Bank and HDFC Bank are among the gainers. Tata Motors as well featuring on the gainers list. But what's not doing well is Dr. Reddy's. Stock is down 2%. Let me just tell our viewers that Trump has in fact said that he will be looking at imposing tariffs on auto and pharma pretty soon. So perhaps that's why we are seeing some bit of weakness on some of these pharma names, Dr. Reddy's being one of them. Aside of that, you also have FMCG names not doing all that well. Nestle, Hindustan Unilever, Britannia, these are some of the laggards. Even IndusInd Bank, it continues to be in F&O ban and down another 0.5% or thereabouts. Some metal names, of course, GSW Steel, Hindalco are among the laggards. Even Reliance Industries, yesterday it had a good run, a 2% up move. Today it is down somewhere around 0.3%. So oil and gas names are also under pressure. But looking at the open, first of all, I want to understand what are you looking at buying in this market? Recommendations for our viewers looking at the market open.
Right, Sananta, now after this surge, one should be, of course, slightly selective, considering that we have seen a decent run across the board. If you'll see the Bajaj Finserv, among the Bajaj twins, we have seen a decent consolidation after this recent surge. So it's offering a good buying pivot, and we are eyeing 1990 as a target area. So with stop at 1840, one can definitely look Bajaj Finserv as a buy recommendation. At the same time, we are seeing catch-up move in the HDFC also. So here, the record high zone close to around 1870, 1880 is something that one can target with 1750 as stop loss.
Okay, those are the recommendations in fact coming in from Ajit. But Ajit, what about the likes of Britannia Industries? Today it's among the top Nifty laggards. There is news flow that the Gujarat plant operations have been partially affected due to a workers' strike. The company, of course, is in talks with the workers to resolve the situation amicably. But it's among the top laggards, and FMCG stocks haven't really fired, if you see, in this leg of the up move, particularly. How should you really approach some of these names like Britannia, Tata Consumers, even HUL and Nestle for that matter?
So that's true, Nanta. So, IT and FMCG, these sectors are basically sitting on the sidelines as of now. The good part is at least we are not seeing any major decline also. So with this consolidation in place, I believe that participants might be waiting for the Q4 numbers now for any meaningful moves or any kind of a press participation. So as of now, I feel that it's prudent to stay away from most of these names, considering that there could be, in case if market witnesses any profit taking, we'll see the first, cut or negativity in FMCG and IT pack. So as of now, it's prudent to avoid any of the long position in most of these names.
Okay, avoid long positions in some of these FMCG names. But before I come to queries, I want to get in your thoughts on cement names. Of course, Ultratech, is the top Nifty gainer, up in excess of 3%. UBS has come out with a very upbeat report on cement. It has upgraded the likes of Ultratech. Buy call target price has been raised to 13,000 from 9,000. That's a sizable up move it expects on the stock. It has upgraded Ambuja as well to buy, and here as well the target price has been raised to 620 rupees from 475 rupees. Dalmia Bharat Cement has also been upgraded to a buy, and target price is around the 2100 mark. ACC is the other one that has a buy call from UBS, and the target price is at 2250 rupees per share. UBS believes that the rough patch may be ending and demand will bounce back in FY26. Cost reduction is on the horizon according to UBS, and they also feel that market leaders hold the upper hand as consolidation continues in the sector, although it is trading slightly above the 5-year mean 1-year forward EV EBITDA. Looking at them, at some of these cement names, would you be also sticking to the leaders like Ultratech, perhaps even Ambuja for that matter? And how are the rest of the pack? How is the rest of the pack looking? The likes of Dalmia Bharat. Which one would you really pick out when if we asked you to pinpoint one stock or two stocks from this pack?
Right. So cement, yes, we have seen the consolidation in the sector, both in terms of fundamentals and price-wise also. And there's no doubt that sticking with the leaders is a prudent approach, considering the kind of surge or outperformance that we are seeing in this recovery across the board. So Ultratech definitely tops the list. The stock is hardly down from its record highs, though it's a broader consolidation that the stock has been observing from last 6-8 months, but it's gradually inching higher towards the upper band. So possibly we can retest the 12,000 mark in the coming days. 11,000, 10,800 is the zone basically where we have multiple supports placed now. So definitely you can continue to hold your longs and buy fresh also in Ultratech, with 12,000 is a positional target. The next stock that one can look at is Dalmia Bharat from the cement space. If you'll see that this stock has also not performed or participated much on the downside in this entire decline, and probably once we cross this 1900 mark, we can see a fresh leg of momentum. So as of now, one can start accumulating this stock with 1650 as a closing stock.
Okay, but we have a query from Satya CK. Wants to know, between Ambuja and Grasim, which one is better for the next 9 to 12 months?
So Grasim definitely looks better, because here also there was marginal correction in this last leg of the decline, and once we break this 2560, 2580 hurdle, then probably we are inching towards the record highs. So here definitely you can look to accumulate. Now the base is at 2440, so that should be your stop loss.
Okay, Grasim looks better. Satya, hope that answers your query. Let's take up more viewer queries then, quite a few of them trickling in. Bhumika Parekh wants to know your thoughts on a BSC. She has 40 shares at the rate of, I think, 5,900 rupees per share. Would you advise her to hold on to it, or would you, how would you advise her to navigate her position on BSC right now?
So Nanda, she bought it at almost at their highs, record highs. So after that, she's seen a sharp correction also towards 36, 3,700 levels also. Now we are in the middle of the band, probably around 5,000 area, something that she should review her position. As of now, she can definitely stay put. 4,400 is now the immediate support area. So that should act as a stop loss. But once we reach to the 4,000 mark, that will be critical whether the stock manages to hold this area or not. Otherwise, we'll again see probably some correction or time-wise consolidation. So if her view is, let's say, for a year or two, definitely she can stay put. Otherwise, she should be taking a call around 5,000 area.
Okay, take a call around that 5,000 area. That's the view. Bhumika, hope that answers your query. The next query from Mukund Yadav, it's on Vari Energies. Hasn't really given a time horizon, but looking at the charts of Vari Energies, would you recommend a fresh buy here? Just want to see how the stock has behaved. In the last 5 sessions, we have seen some bit of momentum. 11% gain, but it's still quite it's still seen quite a bit of a correction. How would you advise investors or traders to navigate this stock right now?
Right, so then the post listing, we all know the kind of surge that the stock experienced, and post that it was a gradual and steady decline. Now, after almost 1.5 months of consolidation, we are seeing recovery, but we are very close to the resistance mark. So fresh buying is something that one should avoid. But those who have long position now, 2250 should be your stop loss, because in case if it again slips below this area, it might witness a newer low in days to come. So with 2250 as a stop loss, you can continue to trail your stop on every rise. Let's say once we cross 2700 mark, you can trail your stop loss to 2450 and accordingly, run this position.
Okay, 2250, an important level on the lower side. A stop loss should be placed at that level. Hope that answers your query. One stock that has been in focus, in fact, one industry or one sector that has been in focus, off late, has been the cables and wires segment, right? Of course, Birla Group looking to disrupt this segment, and even Adani's for that matter. And because of that, we've seen the likes of Polycab, KEA Industries, see a very, very sharp sell-off coming in. Polycab, though, seems to have stabilized a bit after the kind of correction it saw since that Ultratech news broke out. In the last 5 sessions, I think Polycab has just about managed to clock in cuts of 2% or thereabouts. But after the kind of correction we've seen, do you think it warrants a look, or do you think because of the news flow and the volatility, one should steer clear? We have a query from Pannu Anil on Polycab. How would you advise, or what should one do if they are invested in the stock?
News of 2 new entrant in 1 month, definitely that has dampened the sentiments. But I feel it's overreaction, considering that it takes time to establish and build a brand. After this correction, especially in Polycab, on the news of Adani also entering into the space, it didn't react much, but obviously it will take time, considering that there is noticeable pressure. Means those who are stuck at the higher levels, they'll definitely look for opportunity to exit once the stock reaches, let's say 5600 mark. So short term, it might remain in a range. So if your view is very short term, you can definitely stay away from this pack and look for the sectors or themes which are outperforming in line with the benchmark. But if your view is long term, definitely you can start accumulating some of these names like Polycab and Havells around these current areas. Possibly 6,000, 6,200 is something that one can aim as a target if the view is, let's say, 1 year.
Okay, for the very short term, avoid Polycab, but maybe you can look at this stock if you have a 1 year kind of a time horizon. Moving on to the next stock then, I want to take up this query from Shweta Naidu, transformers and rectifiers. She's bought it at 553 or thereabouts, and she also has CG Power, I think at 612. She wants to know which one is good to hold. Your thoughts on which one would be a better pick between the two of the counters?
CG Power definitely, because again here the relative strength is high. The stock has reclaimed its major averages of late. We are seeing a pause around that area. So possibly it's a buying pivot formation, means a fresh accumulation. And in the next leg, once we cross 680, 685 zone, then 750, 760 means it will be gradually inching towards its record highs. So among these two, you can definitely hold CG Power. 620 now on the closing basis should be your stop loss.
Okay, CG Power the better bet, and 620 should be your stop loss. A lot of these defense names have seen a very good recovery. The likes of GRSE, I think last week it gained somewhere around 30% or thereabouts. But we have a query on Gujarat Pipavav coming in from Debu K. Now this stock in the last 5 sessions has seen a 5 to 6% kind of an up move. But how would you view this particular stock? It's still, of course, half of where it was when you look at the 52-week high level. But in terms of risk reward, do you think this stock is looking better compared to the other ones?
So yes, after this correction, Nandita, we are seeing that the stock has formed a reversal pattern on the daily chart, and it has reclaimed the short-term averages also. So gradually, yes, it can inch higher, maybe close to around 155 to 160 is something that the stock might test. So with 130 as a closing stop loss, you can definitely consider.
Okay, consider with a closing stop loss of 130. That's the view on a Gujarat P-Power. Last query really from Alex wants to know your thoughts on Astral. Of course, anti-dumping duty on China on PVC, pipes and resins. But Astral, if you look at this particular stock, it's down in today's session, but in the last 5 sessions also it hasn't really seen a phenomenal up move, because some of the mid-cap names have staged very smart recovery, but Astral is not one of them. Your thoughts on how the chart is poised right now? Just about a 3% gain if you look at the last 5-day performance.
That's true, and price-wise, definitely it has not done much. But interesting thing is that on the volume front, we have started seeing noticeable surge. Means with every passing day, it's witnessing almost double to the average volume we usually say on any single day. So it's definitely a sign that bulls are accumulating this stock now. So of course we need to wait and see whether the stock manages to cross this first barrier around 1380 area. Then we'll have a decent recovery towards 1500 plus zone. So as of now, you can maintain your longs with 1250 as a closing stop loss, with 1450 first, and then 1550, and then 1700 as a positional targets.
Okay, those are the targets to watch out for on an Astral. Hope that answers your query, Alex. But I'm afraid with that we've come to the end of the query segment. If you couldn't take up your queries, please don't get disheartened. Keep them coming in. We'll try and take them up in the next show. But with that, Ajit, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. On the index level, we are, a good 90 points up. So we are around that 23,750 mark. Let's hope that we can reclaim that crucial level of 23,800 as we progress through the day. Ajit, always a pleasure chatting with you.
Same here, Nandita. Thank you. Thanks a lot.
Thank you. And on that note, a big global voice joining in on this show to understand, the latest on the tariff tantrums and how things really will pan out for India going forward. Joining me right now is Mark Matthews, Head of Research Asia at Julius Baer. Mark, lovely having you on the show. Quite a lot of confusing commentary really coming out, from White House on tariffs, right? Weekend news reports suggested that tariffs could be more targeted and less drastic. And, my question is, post all the flip-flop, do you expect the outcome to be a bit market-friendly, even though Trump and White House have really maintained that they don't really care if the market really goes down from here?
I have no insight into what they will announce on April 2nd because it seems to change every day. And we remember the first Trump administration, the difficulty in trying to parse the communications. It creates a lot of noise. I don't really think we should become absolutely obsessed with every headline because we know they change with great frequency. But I suppose I should, because that's what I'm paid to do, interpret the headlines of the last 48 hours. And I would say there's 2 ways of looking at them. On the one hand, to your point, they do seem friendlier, but we won't know until April 2nd exactly what the Trump administration intends to do. My sense is that what they will do is apply reciprocal tariffs. In other words, they will impose tariffs on countries that are commensurate with the tariffs those countries charge on U.S. imports. And then each country will negotiate with the United States, and depending on how those negotiations go, they can evolve the relationship from there. And just knowing a little about the history of Donald Trump, a lot of that comes down to personal relationships. I remember in the first Trump administration, Shinzo Abe, the Prime Minister of Japan at that time, got along very well with Donald Trump. And I don't think it's a coincidence. Japan was one of the countries that had better relations, including economic, with the Americans in that first administration. Anyway, the second thing I would say is maybe this Trump administration does care more about the economy and the stock market than they have been letting on. And one of the reasons for the weakness in the stock market over the last few weeks was comments made by Donald Trump and his deputies last month that kind of alluded that they didn't really care that much about what the stock market does. And maybe if there's a recession, well, that's okay because we have to do these really tough things to rebalance our economy. Nobody else will do it except us, so we're going to do it. Possibly they saw the effect of those comments on the stock market and some of the more high-frequency soft economic data, in other words, surveys, and they got uncomfortable with that. And so maybe they're trying to dial some of the tariff talk back. I don't know, but I would say, we shouldn't get overly consumed by the headlines because they do change literally every day.
That's true, Mark. Every day there seems to be a new statement coming in, and then there has to be some bit of a retraction as well. So one doesn't really know how to read into these comments. But, from an India-specific or India standpoint, of course, Trump has proclaimed April 2nd as Liberation Day for the world's largest economy. Of course, we have, news flow that India will also be seeking tariff reprieve from the US. Do you see the US giving some exemptions to India, especially since Trump has called out India as the tariff king on more occasions than one? But since you pointed out that it's more about personal relationships for Trump, his relations with PM Modi, Prime Minister Modi, is fairly, good. So would you expect some bit of exemptions coming India's way, or would you see, a stringent tariff being imposed on 2nd of April on India as well?
I really have no insight into that, but I would say that the Americans deeply value their relationship with India in the context of a rising China in Asia. I would also say the tariffs are irrelevant. I mean, what I've read is the impact will be somewhere in the magnitude of, $10 billion. And on a $4 trillion economy, that's simply not relevant. So once again, I think there's a lot of headlines around this, but the actual impact on India is pretty much immaterial.
Okay, so would you say that a possible recession in the US will be a bigger threat then instead of tariffs? Because the US government, of course, as I mentioned, has portrayed they are okay with the market cooling off and the economy slowing down. But do you see the possibility of a recession in the US, given all the data points and the fact that inflation is also expected to head higher, in the wake of all the tariffs that are being imposed by the US government?
No, I don't think so. I mean, the classic definition of a recession is 2 consecutive quarters of negative growth, and we don't see anything close to that. I admit that the soft data, in other words, the surveys, has kind of nosedived, but if you look more closely, that's highly sentimental, and the surveys that do divide the respondents based on political affiliation clearly show that Republicans are very upbeat on the economy and Democrats are pessimistic on the economy. So I think that they're heavily biased by their political affiliation in their responses, and that data therefore is not clean. But if you look at the hard data, there's absolutely no indication of a recession. Not our base case. I don't think it's going to happen.
Okay, slim chances of a recession in the US, but let's talk about the emerging market pack then. Of course, we did see a fair bit of correction in the Indian markets, but there is a recovery underway. After the correction, do you think valuations have become fairly okay in India, or do you still see them as expensive?
Well, I think that what took the market down last year was the RBI asking the commercial banks to lend less and being fairly hawkish with its monetary policy, and then the government doing a lot less outlays because it was preoccupied with the general election and a few of the state elections. And now that's behind us. I think we're going to see some economic recovery. By the way, I just point out that the cleanest data series, in my opinion, in India is the GST receipts, and there's no sign of a downturn in the GST receipts. So I think that India is good. There is no other large economy in the world that has anywhere close to India's economic growth. It's around 6% over the next few years. Nobody else comes close to that. I mean, the Chinese say they're growing at 5%. I think most economists would challenge that. That does make it special. Yes, there are other countries that are growing at about 6%, but they're very exotic, very frontier type of places, illiquid. And so, I mean, that's the base case for liking India, and I think it remains very much the case. So it's fine with me.
Sure. Last question really, talking about the dollar index, we've seen some bit of resurgence. If you look at the dollar index, it is at 2-week highs, but it has come off significantly, right? From 110 handle, it has come down to 104. How do you see the dollar trajectory panning out? Because of course, it is very crucial for emerging market flows, right? So here on, do you expect the dollar index to strengthen further, or do you expect it to remain range bound? And in light of that, how do you expect flows into emerging markets going forward?
Range bound or down, but not up. And I think there's two reasons for that. The first is it is very expensive on a fundamental basis. So just looking at its valuation relative to other major currencies versus GDP growth, 2/3 of the dollar index is the euro, and European growth is going to be very strong next year because of this big infrastructure budget and defense spending budget coming out of Germany. The other thing is, so fundamentally the dollar is expensive. But the other thing is, I think there's a psychological element to financial markets. And I don't know if you've been reading in the papers about many people who've been harassed or detained trying to get into the United States through immigration recently. There's a big dragnet across all the major ports of entry as they crack down on immigrants. And of course, they're trying to deter illegal immigrants, but for whatever reason, it seems that message is permeated so much that there's a lot of so-called innocent people who've been caught up in a strange dragnet. And so I guess my point is that many countries have now directed their citizens to avoid traveling to the United States or exercise caution in going there. And if you don't even want to visit a country, then I don't think you want to invest there anyway. And so that would mean, I would think, less direction of money into the United States.
All right, point taken, Mark. With that, I'd like to thank you for taking out time and joining in. But I would look forward to more conversations with you in, either on or around that April 2nd deadline on reciprocal tariffs. Look forward to more interactions, Mark. Appreciate your taking out time and joining in this morning.
Thank you.
Thanks a lot. Well, with that, of course, taking a look at the market, we are near about that 23,800 mark. In fact, we've only strengthened just 8 points shy. I just want to see if we've actually hit the mark, in intraday trade, because we are very close to that level as we speak. There's a sharp spike. In fact, we did dip a bit after open, but we've come back pretty strongly. Haven't really been able to hit that 23,800 mark, but very close to doing that. But of course, we are moving from strength to strength when it comes to the market. Even the broader end of the markets, although have cooled off slightly, but nothing to complain really, because the headline indices are taking the lead at the current juncture. Of course, it's the cement pack that's in focus, given the fact that UBS has upgraded some of these counters. So with that, we've come to the end of this edition of Opening Bell. Thank you for taking out time and joining in, and of course, stay tuned to Money Control for all your latest updates. And of course, come back and join us at 3:30 p.m. on Closing Bell, where I'll see you with some stocks that will be on our radar. Thank you. Thanks a lot.